SCHD or the VOO ETF. Now these are two high quality ETFs that consistently make it into the conversation in the dividend investing community, especially when investors are looking for a buy and hold forever vehicle that will generate massive wealth long term. And this is for good reason. Both ETFs offer massive annual returns, or at least they have historically. But in this video we are going to put both SCHD and the VOO ETF head to head and not only see what each ETF has to offer, but also see which ETF has generated more returns over the last 10 years, and which ETF can truly be considered the king of all buy and hold high quality ETFs. Now stick around because we have a lot to go through. Right after you, please drop a like on this video and subscribe for more future content like this. Just to get everyone else up to speed, let's go through each of these ETFs and see how they work and exactly what they have to offer. So first off, let's learn a little bit more about SCHD. Now this ETF strategy and objective is pretty straightforward. The investment seeks to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. To pursue its goal, the fund generally invests in stocks that are included in this index. The index is designed to measure the performance of high dividend yielding stocks issued by US companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers. Based on financial ratios, the fund will invest at least 90% of its net assets into stocks. Now some more highlights about this ETF: a straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio. Tracks an index focused on quality and sustainable dividends, and invests in stocks selected for fundamental strength relative to its peers based on financial ratios. Now the fund does pay a nice juicy dividend quarterly, which we're going to look at here in a second. And the assets under management for this ETF is $48.77 billion. Now since the inception of SCHD back in October 2011, the ETF has achieved an average annual return rate of around 12 or 13%, and in over 10-year period very closely matched the return of the Dow Jones US 100 Index, which is of course the benchmark index that SCHD tracks. Now, SCHD posted an annual average return of around 11.71% on a net asset value basis, while the Dow Jones US Dividend 100 achieved an annualized return of a tiny bit more at 11.81%. Now, like we kind of touched on earlier, this ETF does have a very specific method on how to pick the stocks within the ETF's holdings. The current holding breakdown is industrials at 18%, healthcare at just over 16%, financials at almost 15%, consumer defensive at 12.6%, technology at 12.14%, energy at 9.6%, consumer cyclical at 9.5%, communication at 4.3%, basic material just under 2%, utilities and cash just under 1%. Now this fund normally holds just around 100 different stocks within its basket of stocks, and the stocks within this portfolio are going to change on a consistent basis, normally once a year. But the top 10 holdings as of right now for SCHD are companies like Amgen, Cisco, abbvie, the Home Depot, Broadcom, Coca-Cola, Merck, Chevron, UPS, and Pepsi. Now again, all the companies within SCHD do pay a nice solid dividend, and on top of that, a lot of the companies have some pretty impressive dividend growth. To look deeper into that, we see that SCHD has a current trailing 12-month dividend yield of 3.54%, which is not a bad starting dividend yield at all considering the price appreciation historically for this ETF. So for investors buying into this ETF, they are not only going to expect the potential for some price appreciation for this ETF long term, but also a nice starting dividend yield that's going to pay a decent amount of cash flow right off the bat. Now the trailing 12-month dividend growth rate for this ETF is 7.13%. Now in my experience, a dividend growth rate of anything over 10% is pretty exceptional. So even though the trailing 12-month dividend growth rate is under 10% as of right now so far, the 3-year, the 5-year, and the 10-year paint a very different picture. SCHD's 3-year dividend growth rate is around 12%, the 5-year almost 14%, and the 10-year over 11%, which means historically speaking, this ETF has consistently paid more and more dividends to their shareholders over the last 10 to 14 years. Now to be more specific, just around 10 years ago, September 22nd, 2013, SCHD paid a dividend of 23 cents per share. Now fast forward 10 years later, SCHD is paying anywhere from 60 to 70 plus cents per share per quarter. So in the last 10 years or so, the dividend has nearly tripled, paying investors much more in the form of dividends for their exact same investment. Now that we learned a little bit of what SCHD has to offer, let's dig into the VOO ETF and see how this ETF works. So the Vanguard S&P 500 ETF, known as VOO, is a popular ETF that aims to track the performance of the S&P 500 index. It's managed by Vanguard, one of the world's largest investment management companies and one of the most respected. Now, the S&P 500 index is a widely followed benchmark index that includes 500 of the largest publicly traded companies in the US. These companies span various sectors and are selected based on their market capitalization, liquidity, and other criteria as well. The index is designed to represent the overall performance of the U.S. stock markets. The VOO ETF works by investing in a portfolio of stocks that mirrors the composition of the S&P 500. The fund aims to provide investors with exposure to a diversified range of large-cap U.S. companies, covering sectors such as technology, healthcare, finance, consumer goods, and others. As an ETF, VOO trades on the stock exchange and can be bought and sold throughout the trading day, just like any other ETF or stock. Now, VOO offers things like diversification, flexibility, and is relatively low cost compared to actively managed funds. Now, since VOO tracks the S&P 500, the ETF holdings are going to be heavily diversified. We have technology at 26%, healthcare at 14%, financials at 12%, consumer cyclical at 10%, communication at 8%, industrials at 8%, consumer defensive at 7%, energy at 4%, utilities at 2%, real estate at 2%, and basic materials at 2%. And VOO's top 10 holdings are companies like Apple, Microsoft, Amazon, Nvidia, Alphabet, Berkshire Hathaway, Alphabet, Meta, Exxon, and United Health Group. So as of so far at least, this ETF has some massive capital appreciation, has a super cheap expense ratio, and also seem to have a very diversified basket of stocks, with the top 10 holdings being about just as bulletproof as they come. Now, since VOO tracks the S&P, it does actually have a dividend, with a trailing 12-month dividend yield of just 1.54%. The dividend is most likely going to be a cherry on top for investors that buy into VOO, because the yield isn't going to generate any significant income unless an investor was to invest a significant amount of money at the start. With some pretty significant dividend growth over the past 10 or so years, dividend investors are actually getting paid more and more the longer they hold on to VOO, at least historically. Now that we took some time to dig into both these ETFs and we're on the same page, let's look at the performance of each of them. So SCHD, at least as far as year to date, is down 2.20%. Over the last year, it's almost flat at minus 1.06%. Now what's pretty crazy is on the same exact time frame, the VOO, the Vanguard S&P 500 ETF, is up almost 17% year to date, absolutely crushing that of SCHD. On the last year time frame, VOO is up 8.34%. Now, as far as which ETF might be a buying opportunity as of right now, VOO is trading pretty close to the 52-week range high at $412 per share, where SCHD on the other hand is trading pretty much at the middle of the range at around $73 per share. Now, what's pretty awesome is if we go over to this website, Dividend Channel, we can actually chart out and compare the full returns for both VOO and SCHD over the last 10 years, with and without dividends included. So before we do so, I want you guys to quickly comment down below. Guess which ETF has returned more altogether, total return, over the last 10 years? Quickly comment down below. So here we have it. Over the last 10 years or so, with dividends reinvested, this is, if an investor was to invest $10,000 in both VOO and SCHD on the same exact day around 10 years ago, that $10,000 at the end of the 10 years would be worth $27,308 for SCHD and $28,948 for VOO, making the average total return very close at 10.93% for SCHD and 11.60% for VOO. Now, a few things on this. First of all, either way, both these ETFs have performed very well over multiple different time frames, and I personally would consider both of these ETFs as very high quality. But what's crazy is that the fact that SCHD has had so much dividend growth and even a higher starting dividend yield, but VOO's growth has still outperformed SCHD, at least on this time frame. Now, without dividends reinvested, of course, VOO is even further ahead of SCHD, with SCHD returning around 9.8% annually and VOO returning around 10.84% annually, turning $10,000 into $24,700 from SCHD, and VOO turning $10,000 into $27,000 plus. So when it comes to the conversation of VOO versus SCHD and which ETF is better and which has returned more, at least on this particular time frame, VOO has returned more. But that being said, both these ETFs are still very high quality in my book. But now I want to hear from you guys down below. If you were only able to invest into one of these two ETFs, either the SCHD ETF or VOO, which ETF would you choose and why? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.